Hey everyone, it's time for another holiday chat. I've got Bob on the line. Bob, Merry Christmas. How are you?
Hey, thank you very much. Merry Christmas to you as well. I'm doing really good and
Awesome.
having a great time with family. How about yourself?
Well, it's the holidays are here, but I don't want to listen to the news because they keep wanting to change the rules on how we're supposed to celebrate. So it's
Yeah,
frustrating because
yes.
you don't know from one day to the next. It seems how things are going to be. But what? How can I help you? What do you want to talk about tonight?
Well, yeah, so there's on the same lines of thinking there with the economy changing and um, fear still being in the minds of people. I'm transitioning out of one business that is has to do with construction indoors to a business that has construction being done outdoors predominantly, all outdoors actually. Um,
Okay.
yeah, Yeah, so just making some changes and looking at purchasing a business that is currently doing a lot of work outdoors and seems to be doing very well amongst the even the fear, but people have a lot of money to spend with their discretionary income right now. It seems so. It looks like it's doing pretty good.
Okay. So tell us a little bit about your history. So you were going into
Um,
into people's homes, and this is the problem that's come up.
yeah, so for more than 10 years, I would go into single family homes and work on windows, air conditioners, attic insulation,
Okay.
remodeling, construction, pretty much in anything that you want to do. I can do it, have my guys do it, so on and so forth, kind of thing. Um, yeah,
And this and then so you've had a downturn in that business because people don't want outside contractors coming in their homes.
yeah. So on a yearly basis, I mean, and we probably go into 2,000, 3,000 homes a year.
Okay.
Um, and um, this past year that got cut to a third. Um, and honestly, I'm over it. I'm over it. I'm ready to move away from it and do my best to be outside of that model. So
Okay.
I still love construction though. So, and there's a lot of opportunities there. So that's what I'm looking at. I'm wanting to um, consider purchasing a construction business. Yeah.
Okay. And so you found another business, and I mean, I can imagine all kinds of outdoor things that are done, roofing, decks, siding, all kinds of other stuff. Is that kind of along the lines of what this other business does?
Yes, that's it. There's they do on-site construction and constructed deliverables.
Okay.
Um, it's a broad range of things. You go from um, constructing garages that are attached to homes to delivering um, buildings to even assembling swing sets outdoors. Pouring concrete pads, building driveways, flower beds, things like that. Yeah.
How was your existing business where you worked on the windows and things? How did you get your clientele?
We got our clientele through word of mouth. I would say 90% of everything that we did was word of mouth. Yeah,
Okay. And I mean, I'm assuming with most of your clients, you have a pretty good track record with them.
phenomenal. Yeah,
Yeah.
we have zero lawsuits in 13 years.
Okay.
So we've no complaints, and our customers are always referring us. If we don't get a referral from a customer, like if my office didn't get a referral from a customer, I would intentionally call that customer and ask them, you know, um, is there something we can do to improve? So great customer base. Yeah.
So what's drawing you towards buying this other business you found for sale instead of just trying to pivot your existing business? Because I'm assuming you've got
Yeah, good
employees, you've
question.
got tools, you've got trucks, I'm assuming trailers, things of this nature to get around.
Yeah, good question. So yeah, so the opportunity comes around with a kind of like a business model that provides a residual income by means of rental income.
Okay.
And that's the long-term goal. Short term, obviously, there's a lot of growth opportunity with cash flow, but yeah, long term is the rental income. So
Okay. And so how'd you find this business?
really, the owner found me, which is oftentimes how it happens. Someone observes that you're good at something. They think that you could run it, and they're in a position where, hey, I want to step away. I want to move on, and they see someone else that can run it, and they give those people an offer to buy it. So that's kind of what happened with me. And which has caused me to question the motivations of the individual seller. And I've been doing a lot of thinking about that, about their motivations.
Mhm.
Which there are some caveats to the sale that help me to understand their motivations more. I'm not sure if you want to go into those details with that at this point, but it is part of the
Well, I was actually just going to kind of ask, what did you want to dig into in this call? So you have a little
yeah.
bit of concern about their motivations. Is that what you're getting at?
Um, I wouldn't necessarily call it a concern about the motivations from a honor or honesty point of view. The concern would be the highest and best use of my time, where a current owner may want to sell a portion of their business that consumes the greatest amount of their time
Mhm.
and retain the other part of their business that they've been working on for 15 years that provides them a consistent income. And I look at it and I say to myself, well, I can take 5 years and build that same business, or I can purchase it from, you know, um, purchase the business and use the velocity of what they have already established, which would cost me a lot of money out of pocket, um, on day one, but yet immediately get an income and use the velocity of what's already been created to push me forward on day one, where it might take me 5 years to get there. Otherwise, if I do it myself. So my concern is that, um, one, do I want to make that step, or build it myself? Do I want to take 5 years to get there, or do I want to, um, you got to pay the price. If you have to pay the time, you have to pay the money, one or the other, right?
Yeah.
So
So let's talk about this business you're buying. You said they're also doing construction. They're building things,
yeah,
delivering them. How do they get their
yeah,
customers?
same way. Um, I mean, it's I've observed their secretaries answering phone calls. I've observed the people walking in. They have a lot of repeat customers. They have a lot of customers referring them, word of mouth, neighbors to neighbors, going down the whole street. There was one time I went on a drive and observed on one cul-de-sac there being um, three structures from the same company in one cul-de-sac of 6 houses. And so that was kind of
What
interesting there.
now? I don't want you to tell me the name of this business, but what kind
Sure.
of name is it? Is it like Dave's Construction, or is it like, Alpha, Construction Limited, or like is it a branded name, or is it named after a guy?
It is branded.
Okay.
Um, definitely LLC branded, probably in a trust, probably set up, protected with liabilities and
Oh, but
all
I'm
sorts of
talking
stuff.
from a market point of view, because it was
Oh
what
yes,
I
I
want
see
to
what you're
get
saying.
at. Do people are people calling the company, or is it because of that owner's reputation?
They're calling the company. Yeah,
Okay, good.
yeah, that's a good question though. The owner's personality is huge. He's not a stand in the corner, nobody knows he's there type of guy. He is type A, extrovert. Um, um, it's good. He definitely takes an important role in the business. So
Okay, so one of the big concerns I have about construction businesses is where does goodwill reside? Is it
Yeah.
in the business or in the person? And it seems to me that this, for the business you found, it's in that company name.
Yeah.
And then the second thing is like, how do they get the business? You've talked about referrals and things. Is there anything else to their marketing engine? Like, do they have a process, a way they advertise, a way that, anything else going on that makes the phone ring, or is it strictly that organic networking type of growth?
Yes, they do have internet marketing. We do at times run ads in papers. Um, and I think there was a event in the city. I think within this 1 month, I think he leased a billboard because there was going to be a lot of traffic for
Hmm.
for an event. So
Okay.
multiple little avenues there.
Um, Now, before the pandemic, would trade shows have been a part of this marketing mix for you and him?
Yeah, both of us. Yeah, absolutely. Yeah. Now, interestingly enough, the volume of business has picked up by a third since this pandemic stuff started. So, which I find quite interesting. And that was in 2020. In 2020, business picked up, and 2021 business has picked up again.
Hmm.
And so, me as a buyer looking at this situation, and going and looking at the past 4 years, I see that you know 3 years previous to this, um, that's probably a reasonable um, price I'd pay for the business. But I'm not sure that everything's going to be stable. We've got the economy pumped up. We've got free money running around.
So,
The
yeah,
Dow is up. It's like, wow, what's going to happen next?
so okay, so there's a few things that we need to get our head around. And I'll tell you that when the lockdown first happened there at the end of March in 2020, one of the very first things I realized is that I was going to probably be stuck at home for the summer. And I
Yeah,
had an image in my head for a long time of a beautiful new deck on the back of my house.
yeah,
So I called my contractor right away, and he did up the drawings in very short order. We needed an engineer's stamp, which was going to take a week. But I said, yeah, let's go. I said, do you think the engineer will say no? And he said, no, it'll be fine. And I said, well, let's get the material.
right,
And luckily got the truck came here like 2 weeks before everyone started talking about how lumber prices had gone insane.
yeah,
And so I just slipped under,
yeah,
and then he built it after. But if you're looking at the sales results of this business, and if they use a lot of materials like lumber,
a lot of
so the
materials. Yes,
so the price he's charging, it's not necessarily sales growth as far as it may
margin
be
growth.
material growth,
Yes,
right?
yeah,
And so this is the tricky thing, because if I was going to analyze a business like this, I would be interested in looking at the number of tickets. And there's a lot of ways to look at this actually. Is he actually doing more tickets in 2020 than he did in 2019?
right. I see.
That would be the question I'm wondering. He might have had a 30% growth, but is that just because of the pass-through cost of the increased price of lumber?
Yeah, the effect of inflation. Right.
Exactly. Right.
Hmm.
And then in 2021, that carried on, and now the price of lumber is starting to come down, right?
Yes.
So is he really busier? I think you need to look at the number of jobs.
Hmm. Okay.
And then when you're looking at the P&L, he probably has a line for his direct labor and a line for the materials.
Yes.
And so I would be looking at that line for labor, because that's been
Okay.
moving more slowly, even though that's gone
It,
up too, right?
right. It should have spiked if you had more jobs. Yeah.
Well, in due diligence, you can probably find the number of jobs, because
Hmm.
you'll have access to that. But the business might look like it's grown and profited from the pandemic, from a revenue point of view? What's the bottom line
Right.
look like? Did it
Right.
grow to the same degree?
It did. Yeah. The margins are still the same. Yeah.
Okay.
Yeah.
And so you're concerned that if things go back to normal, or if things go back to the way they were in 2019, if you buy today, you'll overpay.
Yes. I mean, if you like, think of yourself, your own situation, um, just yourself, but how many other families in your neighborhood already have their deck built,
Mm-hmm.
and that's a saturation. So we could have a 30% decline in decks, and boom. As jobs continue to return and people drive back to work, spend less time at home, they're not only not going to be using their decks anymore. Um, that word of mouth marketing is going to decline because neighbors are no longer coming over and using the deck. They're busy using their own or doing something else to their life other than being stuck at the house. Um, so that's a concern. Yeah,
Yeah.
and knowing how to make an adjustment for that, and um, there's a way of making offers and having a discussion with an owner that's reasonable and substantiating risk in a way that doesn't cause insult. um, so thinking through that is something I'm looking at as well.
Okay. So there's one of two ways to do this. There's, you either have a price for the business and then you attach some kind of extra bonus for the seller based on your performance, or you do it the opposite way, where you say, this is the price that I'm going to pay you based on what you're doing now in 2021. And there's some component of seller financing. And if the performance declines over the next couple of years, there's some kind of deduction on that note.
Mm-hmm.
So you end up
Okay.
getting a discount going forward if the business doesn't maintain its current performance. We're seeing all kinds of stuff like this in the marketplace. People
Yeah.
who've gone down, whose business has gone down, they want to sell, but they want some, they claim the business will rebound. I want some, bonus if it
Pro
comes
forma.
back. The same thing is the opposite is happening for people who've gone up. A lot of them want to price their business based on the last year of optimal performance. What you're talking about essentially is the kind of business that's probably, you talked about a rental income component, right? So
Yeah.
what's nice about rental income is that it's a recurring revenue.
Yeah.
The same money comes in every month. This is why, the phone company has always been a great investment, right? Everyone pays their
Mm-hmm.
phone bill every month.
Right.
And what this business is an example. If we're going to talk about something like Dex, you're talking about an example of a project business. And so
Yes.
it's all about the pipeline of the project,
Mm-hmm.
and it's a discretionary expense.
Right.
No one needs a deck. People do need roofs and having shingles
Yes.
replaced, right?
Right. Right.
And so, if you found the financial statements of a roofer who's been around for several decades, you could probably even find some repeat business in that guy's book,
Yes.
right? As time goes on and people need to get the jobs redone. And
Right.
so a lot of the time for this kind of business, home renovation, home repair, it's number one, it's easy for people to get into the trade. So there's a lot of competition.
Yeah.
This is why marketing is so important. And because there's always competition, if you want to think about a deck, I mean, a couple of guys in a pickup truck could get into the deck business,
Mm-hmm.
right?
Yeah.
So it makes it hard for these businesses to really have an appreciable amount of goodwill. It's
Yeah.
it's a service business essentially.
Yeah. Speaking of that, when considering how much to pay for a business in the blue sky area, goodwill over um, over the value of the assets. Um, with the business, there's two sections to this business. There's the construction, um, obviously, which includes the sale, cost of assembly, cost of the materials, and the profit difference between all of that.
Mhm.
That's on one balance sheet. And then there's a separate part of that business currently under one roof. But um, the owner has discussed with me that he is willing to carry, okay, he's willing to carry the note on the purchase of the construction business if I oblige to make him first priority to retain all rental notes. So that would remove me from the major growth of the business, because that's really where the gain comes from, is the residual growth there as you build up hundreds of individuals paying on the product that you've built for them. Now, once I complete paying for the construction business,
Mm.
then I have access to it. You want to sell this, you want to sell that, do whatever in the world you want to do. So that's a component that I'm looking at as well. I could probably go out and get a loan for the physical assets, the actual physical locations, and then, yeah, I mean, how much of my own money do I use in this deal in order to make it a deal? And am I setting myself up for a difficult negotiation if I kind of I lose that pivot? Sure, if nobody wants to buy a deck anymore, sure, I could pivot to roofing. Okay, I could do that. I have all the crews, I have all the guys, all the trucks, and the skill sets in the minds of those men.
Mhm.
They could probably do that. So I mean, what are your thoughts on that? Like I was saying, there's two businesses under one roof. There's the
Yeah.
construction, and then there's the carrying of the rent on those products that are sold.
So you're selling products and then renting them, or he's financing them and collecting payments over time.
The latter.
Okay.
It depends on what the customer wants.
Yeah.
So if the customer wants to just totally come out of pocket, that's fine. If they want to put 10% down and carry it over a couple of years, that's fine.
Okay.
You know,
So he's basically got a financing business,
yes,
call it a lease to own business, kind of like one of those
sure.
furniture places,
Yeah, you call it that.
like Aaron's Appliance or whatever.
Yeah,
And he's doing the work. So,
right.
um, so like, do you have a pile of cash to go financing people like he is?
Um, I mean, it's possible that I could be in a position uh, to buy out the business, cash out, dollar for dollar. Um, but is that the highest and best use of my assets?
Mm.
Would the highest and best use of my assets be to create my own business and then keep my own notes, or use the velocity of what's already there? So it's a good angle, but then it's a bad angle. And when you have an owner who's willing to stay on indefinitely, um, I mean, great guy, really close friend of mine. Uh, I've known him for 13 years, um, and um, it really interesting situation. I called him up and I said, "Hey, yeah, this stuff that I'm doing has not been going well. I think um, um, I might start doing some construction, such as what you're doing." He said, "Hey, if you're going to do that, you know, uh, let's talk." You know. Anyway, so based on what I've shared with you, what do you think about those two businesses being under the same roof? And back to your same question, you asked me if I have the assets to purchase it. How does that make a difference in kind of evaluating the opportunity?
Well, so remind me if I forget, I want to tell the story of the pool contractor I sold. But
Okay,
the the reason why I asked if you had the money to do that anyway was because if you didn't, then it was a moot point,
gotcha.
right? Um, and so what do I think about what he's doing? I think it's fantastic. I think that maybe he tuned into one of my shows a couple of years ago, because I've been trying. There was a painting contractor here in town, and I was trying to convince them that they should offer this same kind of thing for painting apartments.
Yeah.
Because I was saying that landlords have a monthly cash flow, and in the month that you're painting the apartment, the rent is not being collected usually. It's usually vacant that month.
Right.
And if you could tell landlords it's $1,000 to paint the apartment or $100 a month for the next 12 months, a lot of
Yeah.
landlords might appreciate that.
Yeah.
Essentially what you described, right?
Yes, that's a great business model.
I still haven't found anyone that has been willing to do it, except maybe this guy.
Yeah.
So you can really have some great returns, especially if you're financing, like when he finances a deck, for example, he's getting that note in place. His cost to get the note is the material and labor.
Yes.
When the note is put in place, if he's doing his accounting properly, then he has to recognize the profit he made on building it, but then he gets to collect the interest over time.
Right.
Right. So it's a great business model. And he's older, right? So he wants to back out of the day-to-day running of the crews and all that kind of stuff.
Yeah. Yeah, he's at that place where he's ready to pull off the throttle and spend his life with his wife and children and manage instead of labor. So
okay. So the swimming pool contractor was a business that I had up for sale, and there was a buyer and there was a seller, and they had the same kind of issue with respect to goodwill. What is the goodwill? Are people really calling the pool company's brand name, or are they calling because people heard that he was a good guy at installing pools? Right.
mm-hmm.
The buyer and seller, couldn't agree on this. The business had been valued based on a multiple of the cash flow, but it had been valued based on it being a service business, right?
Right.
And there's not much repeat business in swimming pool construction. Once you have it, you tend to have it for a long time. And so at the end of the day, what ended up happening was the deal was struck, and it looked like this. The buyer bought all of the tools, equipment, trucks, material, inventory of insulation compounds and things that are used in making the pools.
Right.
He bought all that on closing day, and he paid a value for what it was worth on that day, fair market value. But then the goodwill was represented by an agreement that for the next 3 seasons, for every pool that was put in, the buyer would pay the seller some money, a flat fee. And this was going to represent the goodwill. So if the phone didn't ring, if nobody wanted to reach out to them, then that would mean that there was less goodwill in the business, right? Yeah. So the seller participated to a certain degree.
Yes.
In your business, you could work out a similar kind of deal if you're good friends with this guy, where you can say, I'll pay you X amount per job, or maybe it's a percentage of the revenue per job, or a percentage of, the gross margin after labor and materials, whatever you guys work out. And then he would continue to be able to finance the notes. Basically, instead of the customer paying you for the job, he would pay you for the job. Then he would collect payments from the customer, right?
Yeah.
You're talking about velocity and where are you going to use your resources. I would be thinking about this. If I was able to take over this business and I was able to make a bunch of sales and not have to worry about getting paid or about my customers qualifying for financing, because he's going to approve them.
Right. Every one of them.
Right.
Yes.
That gives you a competitive advantage in the market, right?
It does.
Does he advertise financing guaranteed or anything like that?
Yeah. Zero down.
Yeah.
So
then the question would be, if you could use your past customer lists in your existing business to create more action over there, and you might work out a separate deal for those. So for example, you might say, okay, I'll buy your equipment and machinery, etc. I'll give you a piece of every job that will represent the goodwill over the next, whatever period of time you negotiate. But then I would say to him, I'll do the same deal. I won't give you a piece of every job done to the people on my existing customer list.
Okay.
From my home renovation business, my window business, because
Right.
they're already my customers and I intend to go back and market to them.
Right.
But what I would like from you is I would like some kind of spiff on the profits of the note created to the people that I have a relationship with.
Mm-hmm. Right. Yeah, that's
Because in
definitely something
that case, he's leveraging your goodwill.
Yeah, you're right.
Right.
And I do have the advantage of a guarantee that the note will be purchased. I will continue being able to leverage the risk of note carrying without actually carrying the risk.
Yeah.
Because he's a guarantee purchase. And that's obviously that he's willing to put that in writing already. So that's
like if you found a banker who was willing to say, I'll approve every one of your customers for financing.
Yeah.
I mean, that's what this guy's offering to do. And I don't know how much money you have or how much you would be willing to do this, but I'm guessing he's probably got significantly bigger resources.
Much so, yes.
Because every month he's got these payments coming in, which adds to his pot of money he can put back out.
Yeah, for 13 years.
Right.
Yeah.
So it sounds like you shouldn't consider him an obstacle or something that you need to acquire as well. You should be thinking of him like a resource, an ally, something that gives you power in the marketplace.
Yeah, I appreciate that. I didn't really look at that angle.
Yeah. Because here's the thing is as he gets older and older, he eventually is going to want to retire out of that too.
Yeah.
And true. So a good, strong working relationship between the two of you, I mean, it could look like this. At some point, he could say, I don't necessarily want all the notes, or at some point he might say that, he wants someone else to take care of servicing the notes, collecting the payments, all that kind of thing. And then maybe it evolves to a point where he's just lending you a flat chunk of money at a certain percentage that you're using to finance notes.
Right.
Have you read the book Invest Local?
I have not.
Okay. You should get it because it's going to make your head spin with all kinds of different ideas of how you could play this down the road.
Yeah.
Okay.
Yeah. He has mentioned that he would be willing to carry, he off the cuff, he said, hey, if you ever need financing for anything else associated to this model, I'm there. Count me in. No questions asked. I'll write the check because I know this model works. Which is, again, what you mentioned, like the banker who would approve. He's the yes man. So, and yes, I'll grab that book.
Yeah. So, I think it's going to come down to working out your deal as far as acquiring his business. Because number one, you have to make sure that it's because as a multiple of cash flow, a service business, like for example, building decks, it just doesn't sell for that much.
No, you're right. Yeah.
Right. And so I know it benefited from the pandemic. That growth may not continue forever. So if you can work out a deal where you buy his stuff and then give him some kind of piece of every sale, that's going to work out for you. Most sellers want a bunch of money, but it sounds like he's not really interested in a bunch of money. He understands the value of money over time.
Yes, he does, very much so. And that's why he's wanted to split. Well, not split. That's why he wanted to keep the company separate instead of sell the whole. So yeah, I mean, I definitely think that that's a wise and reasonable avenue of negotiation. My next one is EBITDA and the owner's discretionary income. He takes quite a bit of discretionary income, I should say, out of the business. But when I mentioned it to him, not really willing to consider his income as a cost of managing the business. Um, so that's something that I might ask you how you and your experience would discuss that with a man whose heart and soul is in a business. He wants to sell it for as much as he can, but yeah, I mean, what do you say to that?
Well, if you can organize a deal like the one I've described, it's irrelevant.
Oh, that's true, because he'd be getting a portion of every sale,
Yeah.
and
Because,
rather than blue sky.
exactly. And so if he's getting, I don't know, let's say you give him $100 for every job you do, right? Well, if the number of jobs doubles under your stewardship, then the money flowing to him is going to double.
Right.
Right.
That's true.
And so,
as well as his notes,
the creation of notes and everything. Right.
Yeah.
So if you were to buy the business for a certain dollar figure, if you said, I'm going to buy your business for $500,000, and then pay you over time, and then the business declines, well, then you could end up in trouble.
Yes.
Right. And so you're always going to want to discount the possibility of the business declining as things normalize. He's going to want to insist that the performance is going to carry on. So if he is insistent that the business is carrying on at a higher level, and you say, great, then let's have it so that you participate. So as the business stays high and continues to go high, you'll continue to get more money by having a payment based on the performance of the business.
Yeah. So as an example, I would take what he's asking for the business and divide that into how many jobs get done. Obviously, with a consideration of what percent of the income does each job account for, and that percentage is the same basis of percentage counting towards the asking price of the business. And then going forward, every one of those would count forward.
Yeah, like
If that makes sense.
What is he asking for the business?
Oh, yeah, man, it's not technically for sale unless I want to buy it. And
but has he mentioned a figure?
His figure was between 2.5 to 3.
Okay. And what kind of cash flow is the business creating?
You want gross or net, or?
Well, what is the revenue of the construction side, not the income from the note holding? Like, what is the?
Gotcha.
Yeah.
The gross of the construction is $1 million.
So he wants 2.5 times the gross revenue.
Yeah.
Yeah. So that's like crazy land.
Yeah.
Yeah. So what is the cash flow? Like, how much money does this business make? 500.
Yeah.
Yeah. So,
and you have about 900 in real estate.
So, okay. So there's real estate included.
Yes. Corner lot, busy corner lot.
Okay.
And then 2 other physical locations that are for storage of materials.
So if you didn't buy the real estate and you were leasing instead, what would you be paying in rent?
Yeah, good question. Yeah. I haven't calculated that.
You need to, because he's got a service business lumped together with a real estate investment.
Mm-hmm, right.
So when he says 2.5 million, maybe it is worth, I don't know what the properties are worth, right? But when you take that $500,000 of cash flow, you need to remove an imputed rent figure.
Right.
And because let's say those buildings should be commanding $100,000 a year in rent.
Yeah.
Right. Well, that reduces our cash flow from 500 to 400.
Mm-hmm.
Right. Now the buildings are worth whatever they're worth in the market. So
right.
Local real estate appraiser is going to be able to figure that out for you. Commercial guy.
Yeah. Yeah.
But if you have a construction business earning $400,000 a year, I haven't done the research. I haven't looked at comparables, but it probably wouldn't be that much more than like a 2x multiple. So maybe that business is worth 800 grand. But how much furniture, fixtures, and equipment are in that business?
Yeah.
Do you have any idea?
Yeah. At any given point in time, I think they have about $3 million of materials, in pre-acquired for assembly and distribution to job sites.
So
So
he keeps an inventory similar to like a lumberyard of his own?
yeah, like a couple 18-wheeler loads. Yeah, no, not a whole lumberyard, but usually there's two truckloads on order at any given time being rotated out. So that's
When does he
included in
pay
the
for that
price.
though? But where does
Oh,
he,
I have
when
no idea.
see, but
Yeah,
that's
that's a good question.
critical. It's critical because for this reason, if he's always paying for that stuff 30 days after it's delivered and he's using it within the 30 days and he's collecting
Right.
money from customers and whatnot,
Yeah,
then his suppliers are financing that need,
that's correct. Yeah.
right?
Plus, he has a 30-day net with the seller of the lumber anyway. So,
Right. So understanding the flow of cash is important in this business. And so do you know what his like equipment, like trucks and tools and all that kind of stuff might be worth? I'm guessing it doesn't add up to a whole lot.
no, it doesn't. It's all used. It's all 10 years old. So
Yeah. Okay.
it's not even worth putting on the balance sheet, really.
So in an offer on this business, what I would be looking at is something like this, saying, I want to buy the business, but I don't want to buy the real estate.
Yeah.
I'll rent the real estate from you. This is what my cash flow will look like with me operating the business. He'll collect rent and he'll be doing the notes. You'll just be doing the construction business. You'll be looking at a much lower investment, right?
Yeah.
And then if you say, well, this business is worth 700 or 800 grand, I'm just spitballing here. And then you look at the number of jobs done every year over the last, say, 4 or 5 years. Well, when you divide that out, if it divides out to like $100 on every job, then that's how you can kind of measure. Or if it's 200 or 250, whatever it is, you say, well, that's what this business's value is worth if it was divided up amongst all these jobs. So going forward, if I had to pay that amount on every job, would I still be making money? And if I had to pay rent and all that kind of stuff.
Right. That's good.
And if the answer is no, that just confirms that the business isn't worth that much.
Yeah.
Right.
Right.
And
that's good.
What you will find by doing that kind of exercise is that it's really hard for this business to be worth a lot of money because of the competitive forces.
Yes.
In
fact, I think it was just a couple of weeks ago, his number one competitor gave him a phone call and he said, hey, this pandemic has caused me to really like staying at home, and I'm ready to, he's also at an age where he wants to step out. So he called and said, hey, I think I'm interested in selling my business. I'm going to get it ready to sell in the next couple of months. Wanted to let you know so you can get the first offer. Yeah, so it's an easy cost of entry, and it's interesting. I was in the room whenever the phone call, in the area whenever the phone call came through, and I said to him, what do you think you're gonna offer him? He said, well, the cost of entry is really low and anybody could do it. And I said, that's right, brother. Mm-hmm. So it's good, for one, that I'm in a situation where he's also considering the same situation on the other side as I'm considering him. And I hope that helps his mindset and helps the ownership pride, honestly, that comes along with every person that goes to sell a business. So, yeah. What do you think about any kind of, like owner carry or SBA second positions for loan or equity. What do you think about any opportunities there to use low interest, access to low interest rates for money?
Oh, you mean buying the business with an SBA loan instead of getting
Yeah,
a chariot?
anything like that. Because
Well, if you borrow
sooner I
money
pay
from
off the business.
if you borrow money from a bank, the minute you sign, you owe that whole amount, right?
Yeah,
And
right.
if the wheels fall off, you still owe
You
it,
still owe.
right?
Yes.
And so you can get a house with like 10% down, right? Or even
Correct.
less under certain programs, but
That's
generally
true.
speaking, you can get a house for 10% down.
Yeah, but I get your
So
point. That's good.
when the SBA is willing to do business acquisition loans with 10% down, what they're
Yeah.
telling you is that small businesses have the same risk profile as a house, which it does not.
That's true. There's nothing close.
Right. So what happens is it skews the market. People can get a lot of money cheap, a lot of leverage cheap, and that pushes prices up.
Yeah,
And,
it should be a 90-10 rather than 10 for 90.
well, it wasn't that long ago that I think the SBA was only willing to do like 60, 65, 70% loans.
Right.
Made a lot more sense. Right.
Yeah, it did.
And so just because you can get the money, it doesn't necessarily mean you should. Like for this business, I would always be comparing to what if I just did it myself? Like you've got all those customers who you did window work for 13 years.
Right.
Right. Like if you started to go through your sales slips and started calling past clients and letting them know that you were offering this other array of services,
I'll probably have more work than I could handle.
Yeah. So if, what are you buying from him?
Right. Systems. That's really all it is. Systems and a velocity vehicle. Less work. Yeah. Very good points.
Yeah. It makes sense to buy a business because you already get customers and, you're known in the market and you get those systems and you get other employees and everything like that. But if you overpay and your assumptions about the future are incorrect, then you can still put yourself in a risky position.
Right.
Like if you were to, I know your business is down quite a bit, but if you were simply to start contacting past clients offering these other services, there isn't any risk in that.
No, there's not. Right.
Right. And you could grow that business.
Yeah.
So if you look at it from this point of view, if you took over his business and paid him for his equipment, which you said isn't worth much, and then agreed to pay him X amount for every job over the next 5 years, basically what you're doing is you're sort of paying him for every lead. You're turning the goodwill value of his business into like you're paying him for every lead. It's almost like he's changed his business into a marketing lead generation vehicle for you.
Right.
Right.
Yeah, that's a good, another good angle. I like that.
You could even position it like this to him. You could say, hey, instead of me buying your business, how about you just subcontract every job to me? Right.
Yeah.
And keep $100 or $200 for yourself every time. If the numbers work. I don't know what the numbers are specifically, but because if he ever gets to the point where he doesn't want to do it anymore, like who is he going to sell it to?
That's right.
The guys who are doing this kind of work can build their own business.
That's true. Yeah. It looks like it's the volume and the ability to weather the ups and downs in the material prices.
It's the financing.
Oh yes, it sure is.
The fact that he's doing financing is leading to the volume,
It sure is.
right? How many new cars would be sold if you couldn't get a lease or a loan,
Oh man,
right?
good point. Yep.
And so he is removing the number one barrier. Like, is he the cheapest operator,
No.
like as far as the sticker price? Right.
Oh, he actively on a monthly basis, does secret shoppers, we'll call them
Mhm.
that, and goes around to 3 other zip codes and makes sure that he is at the same price as they are.
To make sure he's at the same price.
Yes, because his income is made through the notes. Um, that's the main goal, is to get the traffic from a customer not having to put it all, to buy the whole thing in one bite. So
Yeah. So does that mean that the construction jobs are actually being done profitably, or is there a little bit of lost leader activity going on?
I looked at the numbers on that, and it looks like they are very well done profitably. Yeah, on every one of them. Um, mm, there were two or three in a quarter that were in a loss, um, but those were really, and to give them credit, intentional losses for character. The contractor had failed to do the job properly.
Oh,
Um,
so it was like a rework situation kind of thing.
yeah, yeah, yeah. So those 2 to 3 situations were reasonable.
Yeah. There's an opportunity there,
Yep.
but you can't pay a lot for this.
Yeah, I really
And
like your consideration to pay him back per job. What were you
yeah,
gonna say?
well, and if you separate the real estate from it,
Mm-hmm.
like make
Lease
him a
back.
deal for the business, lease the properties that are required from him, and then you maybe you at the time you take over the business, you get an option to purchase the real estate.
Yeah.
And you run the business for 2 years and make sure that everything is good and everything's going well. And then you'd make the decision at that point based on what you know if you want to exercise the options to buy the real estate.
Right. And really, um, a lot of times in these type of construction businesses, the brick and mortar, um, the signage, the curb appeal on a main street boulevard is it's just a front. Like, it's not actually needed. You
It's
know,
just marketing.
um, yeah, it's just marketing. So finding a way to replace that with other means of marketing would be ideal. Reducing my cost and putting that back into the profit of the business to then turn that around year over year.
Yeah, a lot of people run a business like this just by living in the country where they might have
Yes.
a 2 or 3 acre piece of property and they got all their storage and, a big outbuilding, that they're using for assembly or something inside.
That's right.
And they would just do it that way. They wouldn't be on the main drag.
Right. That's right. These are some really good thoughts, good ideas. Um, uh, any any other angle that you might think would work if a material if something material in the business changed, um, such as if he chose um, not to be available for carrying the notes of the construction jobs, um, if something like that changed,
Well, if
what do you
something
think?
like that changed, then you would lose your advantage,
I think so too.
right? But
Yep,
if you were paying him over time by giving him money for each job, that wouldn't matter,
that's true as well. Yeah.
right?
So
Because
again, structure is everything.
yeah, structure is everything. Because if you pay him over the course of time based on the performance of the business, you're sharing the risk back to him. He still has an interest in the business. He has
Yes.
an interest in your success if that's the way the deal is formatted.
Yes. Yeah, he sure does.
Yeah.
Um, let's see. What do you think about um, how could I incorporate some um, instead of taking, let's let's say I didn't take all of his good faith away, all of his blue sky away, and in turn exchanged it for um, tomorrow's value and some of the notes. Would that be? Do you think that would complicate it to a degree that it would? Are you kind of following what I'm saying here?
So
So
so instead of paying him for some of the business that is derived from taking over his business, the goodwill is what the word you're looking for, right? Instead of paying him for
yes,
the goodwill, you are looking for what to do with the notes.
yeah. So let's say the business um, consistently rolls off 100 notes a year, and um, instead of me taking off a certain, let's say if I took off 10% of his asking price, and because that was, say I'm saying, hey, this is still too expensive, this is still going to push my margins to a degree that this could train wreck, um, and he's not willing to budge, I'll say, let's roll this 10% over into some of your current monthly residuals that you're already getting. So let's say today's value of 100 notes, $10,000. 5 years from now, 10,000 turns into 20. I don't know. We're just making something up. So in this way, he could keep more of his goodwill, and I would have to wait for the return of that goodwill that I paid out to him on day one through the notes of his existing business.
Yeah, you're talking about intertwining the
Too
interest.
complicated.
Yeah,
Yeah.
it's like something that some boardrooms would come up with in a big business. Like in Japan, when companies start buying enough from each other, they'll want to swap stock in each other's companies and stuff. And
Yep.
and it's great when you have a whole army of people that can handle the details on an ongoing basis. But here's something simpler. You could if he says, I don't want you to, pay me over time for every job, then you could say, well, what if I sold you the notes at a discount?
Yeah.
So if it's a $10,000, let's say it's a deck of $5,000 note that somebody's going to owe, but he only has to pay you $47.50 for it.
Right.
Right. So that's going to boost his yield.
Yes. Gotcha. Yeah, that's a good angle as well. Those are really good ideas. Well, thank you very much for taking the time to talk with me today.
Listen, Bob, this
Definitely.
has been a great call. I'm glad someone out there has been listening to my stuff, or maybe he never has, but I'll tell you that if you read Invest Local, you're going to have a much better idea of his angle.
Yes, I've been looking at everything from rent to own air conditionings, rent to own decks, like rent to own paint, rent to own, I mean, anything that could be attached to a house. Yeah.
I even had a friend of mine who is in property management. He manages like 150 apartments for other people.
Man.
And I suggested to him, why don't you do this? Why don't you say to new tenants, this was years ago when flat screen TVs were first taking over from the old cathode ray tube TVs. I said, why don't you say this to prospective tenants? It's X amount per month on a 12-month lease, but if you're willing to sign a 24-month lease, we'll give you a brand new flat screen TV for an extra $25 a month.
Man.
Right? Because he's already
Yeah.
collecting the rent through pre-authorized debit out of the bank accounts. And I said, the landlord will happily buy the TV if it means another
Yes,
$600 and knowing that they have a tenant for 2 years instead of one.
that's
Right.
right.
And I was trying to show him the advantages, and he's like, oh, that's too hard. What if
Howard.
who's going to deliver the TV or what? And I'm like, just like, dude, like, I'm giving you gold nuggets here.
Yeah, I would have gone to the owner and said, "Hey, you want to give me a bonus for signing 24-month contracts?" You
Well,
know,
yeah.
so many angles to work that. That's great. That's really
Awesome,
good.
Bob. Well, good luck. Let me know what happens. Fire me an email if you do this deal.
Yeah, definitely. And I'll look around for your book. Where do I find it at?
Oh, it's on Amazon.
Okay,
Yeah.
invest local.
Invest local. Yep.
All right. Thank you so much for your time today. Appreciate you, David. And
All right.
very cool, man.
Have a
Have a
happy
good
holiday
Holiday Shoulders.
season. Happy New Year.
Yeah, thank you. Merry Christmas.
All
All right.
right.
Bye
Bye
bye.
bye.